Welcome back to this live session on Friday, first session of the trading week, looking at the market from very fresh perspective, as there was an unusual breakdown that we have seen previous daily price action, followed by quite a few long week doji here at the moment that has formed. The market is showing up to be significantly volatile at the moment. And with that volatility that we can see, gold currently having a significant potential entry opportunity here. Once we see the prices given us the entry opportunity, we'll be looking to enter in this market. So let's begin the day as the last day of trading week. Looking forward to enter the trade on a high probability setup. So looking at daily chart, first of all on gold, we can see that the market from the daily chart, the previous daily price action was significant bearish engulfer here, that you have seen the prices form a bigger bearish engulfer, and with that bearish engulfer formation, the market here has created a move which we can see the high and the daily low. And as this market is in a downtrend, we are looking at in this market for possible entry either to bearish or bullish based on what kind of market structure is being created here. Welcome. The market is forming a W on smaller time frame. Very good question, very good observation. So this is what we are looking at. Are you going to see a W formation playing out and the market is bouncing off that level, or you could see the market to drop again back to the support level? Looking at first of all the intraday, the 4-hour time frame here on gold, and we can see the market on this lower time frame from this support level. There was a back-to-back 2 4-hour doji formation that we have seen in this market. So if we look at the daily price action, that you can see from the daily, it formed that daily candle. It has both direction has tested. Now the overall, good morning everybody, overall market structure that you can see on gold is long-term bull market. Previous daily price action that you can see from this high, there was a complete breakup structure here that you can see on gold. And with that breakup structure, if we look at from that high, the price has completely rejected back below here with this momentum that we have seen on gold. And that breakdown on gold is eventually giving us the probability that this market eventually could come back down here. So if you look at the weekly and the monthly, that you can see the market after creating an all-time high, the price has got a stronger rejection from this higher price. And at the moment, what we can see, the lower time frame price action here creating series of lower high from that level, which is looking at the 1-hour chart. We can see there was a complete breakdown from here, followed by pullback, another breakdown, followed by deeper pullback. The market now trying to break again back below here in that area. So looking at lower time frame, which way we are looking at today the market to be heading here. Now looking at the Forex factory calendar to see that today's schedule, coming up to high impact news, preliminary UOM consumer sentiment, which will be later tonight in my zone, which is giving some momentum potentially on gold and dollar. So where we are looking at here now at the moment, the price to operate, if we look at, we can see this market as the last day of trading week, waiting for the price to possibly to drop down here to break that low. Now before we look at the market to drop down here to break that low, you could see the market potentially to retest and then to return. This is the trend line the market is respecting here on gold, that you can see. Now this trend line is absolutely important. If you guys look at the high and the low of the trend line, you can see that pattern that the market is following here. And from that trend line that you can see where to the market to test and then to form a structure. This is very sweet structure that you can see that the market has formed, and that structure is giving a possibility for gold to ultimately drop down to this long-term support level. Are you guys with me? So that means on the short-term perspective on gold, we are looking at some downside here. We have seen there was a breakdown. Now that breakdown is telling a very vitally important story. Keep in mind guys, every candlestick pattern, every breakdown has a story. How do you read the story? You need to predict the story even before it happens. Look at this analysis that I posted. It's in fact gone too viral here. You can see almost 300 view on TradingView. It's quite a few. This is the 1 hour price action on gold, and I have posted this analysis just 2 days ago before it break down. Now this is how the smart money trade. They guess or the predict the market before it happens. And you can see that the market almost did exactly what we have looked at. How do you know that how the market could react in those kind of situations? This is the 1 hour price action, and you can see from here that the analysis was posted on TradingView. Let me start to look at here from the lower time frame. Okay, so if we look at this zone, from this level the analysis was posted. It has gone up for a pullback and then ultimately dropped down here. So that means when you see the market became overextended, especially from the major trend, we all know that we are to trade with the trend. We all know that always trade with the trend, right? Also, sometime you need to know that prepare for a breakdown. That's where the smart trading, that you prepare for a breakdown when it's needed, right? This is what the analysis says, that there is a preparation for a breakdown, and that analysis exactly has played out before it happens, right? Predicting the future is not easy, but you can't predict all the time 100%, but you can stay in an edge by becoming more than. And as a trader, sometimes you need to predict more than 80 to 90% of the time. And it's possible if you know that the strategy, how the market works, and what are the reasons behind the price action. Becoming more curious is very important to become a better trader. Now that being said, here what we are looking at in this market, you can see this is a trend line here. Okay, so if you look at resistance here, resistance here, resistance here, resistance here, resistance here, resistance here, a very important key level of resistance, right? Now in that resistance, the market, okay, so from that resistance line, the price getting rejected. If you look at here, you can see from here a complete breakdown to that key support level, bounce back to the upside and drop down to that key support level, bounce back to the upside. Now what we are looking at here, another drop back to this support level. So it's a very narrow range, but we are looking at here in that market for the price to drop down here to this key support level. Currently it's on a narrow range, and that range, if the market is being able to break that high, grabbing the liquidity, we can look for possible short-term selling opportunity. Are you with me? Ready for an entry? Say yes if you are ready for an entry in the live chat. Welcome. How are you? I'm good. Thank you very much. Welcome, welcome. Now, there is a major support at 3940.77. Yes. Coming up. And that is where the market is structured. If you look at welcome. So now you can see after break of this low, it's trying to break that resistance line that you can see here, and with that resistance the price is trying to show up back to the upside here, and you can see the market has crossed that high. From that zone the market slowly breaking back below here to create a new lower low in this market. And where you can see the price, if you look at here, you can see it's respecting the trend line. And when the market is respecting the trend line, there is a very important point to look at, is that if this trend line breaks, if the market breaks from the trend line, create a new higher high or new lower low, there is a new opportunity for us to trade the market. And it's important that as a trader, always look at the zone. See, the market will never give you all the time a trading opportunity. There is a hundreds of candlestick pattern forming every minute. If you're looking at the 1 minute chart or 5 minute chart, every 5 minutes there is one candle, right? And you can't trade every candlestick pattern. Where do you enter? Where is your entry? That's where that you need to look at. So this is what we will be in fact clearly discuss. If you guys followed our live session throughout this week, right? Every trade we opened, we have been successfully able to close, except yesterday some trade didn't work out, and that's a part of trading. And that's why we don't have 100% winner. We have over 90% winner, and that's completely fine. But the best way to trade is when you are opening, you need to be able to manage the risk. That's the key part of becoming a trader, right? So if you look at this market, you can see this is where the market structure is building up that momentum, right? So how can we understand now today's market, that this market is going to drop or going to break to the upside? Let's start the daily chart first, okay? Now daily price action, this is the most important price action that I look at. This is the most important time frame also I look at when I'm looking at the daily market structure. Now market structure is the number one. That means 70% of my trading decision. So if we make a trading decision, we cannot make a trading decision on a single confluence, right? That's the way the trading works. You can't make your trading decision only based on one confluence. You need different parameters to align to give you a trading decision. So to make a trading decision, many factors that I look at. One of the most important factors that I look at is the market structure. 70% weight that I give on the market structure when I'm opening the position, because market structure, liquidity, and price action, these are the three fundamental pillars that is the market is governed by. Like the universe, if you look at, that's why the Nikola Tesla once said that if you want to know the secret of this universe, to know that how it operates, then think in terms of energy, frequency, and vibration, right? So if you look at the remote control or the AC current, he was first that being able to invent that, like alternating current. Otherwise this world wouldn't be light up if there wasn't AC current. So he knew that secret, that how the universe operate, that you need to know the in terms of energy, frequency, and vibration. So that is what it is, right? So look at the science, the quantum physics. If you look at zoom in, go to the subatomic level, you're gonna see that there is only the wave of energy, nothing else. So that's all. So you need to know that. That's how you can understand how the universe operate based on the energy and frequency and vibration. Because when you go to the subatomic level, this is the wave of energy, nothing else, everywhere. So it's interconnected and it's all permeating everywhere. Similarly, if you look at the market, also interconnected, can you get a candlestick pattern that is not, the price is not connected? Go to back to, if you look at the monthly, go to the, you see that, go here, the lowest point that you can see in 1970, right? And then 82, it's almost 30-40 years ago, right? So you can see the interconnected market structure, right? There's nothing here except the candlestick pattern. So it's the same as that. So if you want to know the secret of this market, how it works, then think in terms of market structure, liquidity, and price action. Now the market structure is the number one that we look at when we are looking at the price action and when we are looking at this how the market operates. So 70% the weight given to the market structure, right? The market structure will give you the directional bias, because this is where, first of all, you need to know that if you want to navigate to the shop or anywhere in a new city or in a known city, the first thing you need to know the direction, which way you should go, south or north. Then coming later, that should you take a taxi or should you drive yourself or you should be walking by yourself. It depends on the direction, the distance. Now this is what we are looking at here in that market. If you look at, so that being said, here on, if you look at, you can see this is a gold here, and in that market, so you can see the market has broken below with a one single momentum, and in that breakdown that you can see the market has broken from that resistance line completely back below, and as the market is respecting this resistance line, right? So lower time frame, we can see the market is respecting the, very important to look at respecting this. So whenever it will disrespect, that means it will break from the trend line, there is a time to enter the trade. Very simple, right? It's not difficult. The only thing that you need to make sure that you have the consistency of understanding the market structure. Welcome. Now the market has little slower volume, that is potentially preparing for another breakout or breakdown. Now you can see this is where the gold is, the market from here trying to break to the upside here, where 15 minutes and the 5 minutes price action has created a rejection from here. It's now bouncing off that level, and that bounce off the level, expecting the market to cross that high and then potentially to return back again to the downside here. Welcome, welcome, welcome. Yes, thank you very much. Still break through that upper trend line on next move up. Welcome, everything vibrates. Yes, absolutely. What time frame are you looking at? That's what you are looking at here in that market. So what we can see in that area, this is where the market is creating that structure, which is, we can see the price respecting that level, and as the market respecting the trend line, what we are looking at for the price to retest and then to reject back again. USD JPY bullish trade. Now USD JPY we're looking at here, and if we look at the dollar yen, that you can see the market is where the price. Now looking at dollar yen, we are looking at in another window, the dollar yen. Okay, so be aware of all kind of if you guys look at that, the channel that we have is our premium group that you guys can see. So if we bring out that for those who are joining the academy, okay, so this is our premium group. All right, so other than anything else is not ours. Okay, this is our premium group and premium education. And for those who will be joining us, only use our website to join us. Okay, nothing else. So if you look at www.forextradingwizard.com, so this is our official website in the academy. If you guys looking at here below this video, there is a link. Now if you are joining us, currently we had our website. If you guys look at the link below this video, you can visit the website. You can find link below this. Currently 95% off, right? Joining us, which is ending very soon. And you can visit the website, join us only via the website, right? Now that's where, if you are in the premium academy, directly there is an admin for contacting. There is no other way that you can purchase or anything from us. Now if you purchase anything from us other than the website, it's you have to think about it. So make sure that not making any mistake, because the key here is to help you as a trader, right? Our goal is to help you as a trader. So make sure guys, always stay through the official website that you can see, www.forextradingwizard.com. or if you are on the academy, then there is an admin support address available for any contact that you have, right? And keep in mind that I have never ever asked anything from you other than giving you the trading education. So keep in mind that. All right, so this is very important. Now let's look at on gold. What we are looking at in that area is maintaining that series of higher low, and with that series of higher low, the price is pushing back to the upside. Where the market is creating that structure, if you look at here, this is where the market is maintaining that series of higher low, and in that series of higher low, waiting for the price to cross that level, creating a new uptrending market structure. And we'll be waiting for the price to break that high, grab the liquidity, and then to trend back down. So this is very important to look at. Okay, so now what we can see on after this dollar yen, the market is maintaining this structure where from the bigger picture perspective, here is the price is showing up. If you look at here, you can see this is a structure formation in that area, and where there is a sideways movement, expecting the market to break that high and then to trend back down in that direction. Welcome. This is a support level, waiting for the market to break that support, break that resistance, and then to return back again to the major direction of the trend. So what kind of movement that we can expect later today? If you look at here, you can see this is where it's the Friday, so last day of trading week coming up, preliminary UOM consumer sentiment. So two high impact news coming later today. And with these two high impact news, the market is potentially be retesting and then rejecting back down here to create a new lower low in this market. So as the market is breaking that high, which we can see the price is breaking that resistance line, which is key level of resistance, waiting for the price to possibly to create a new higher high and then to return again back below here to this support level, which is maintaining this downtrending market structure. Look at the 4-hour chart here, that you can see back-to-back 2 4-hour doji formation. The candle closed in few minutes earlier. Now in that area the market is moving in a sideways. Are you guys ready for an entry? The most important way that we need to look at here is to trade with the trend. Just has crossed that trend line and you can see it's carrying primarily a rejection from the higher price. Would like to see that market managed to break that trend line completely from that level. Now understanding market structure will give you a very clear idea on how to trade the market. Guys, keep in mind that trading is not difficult as long as you know that how it works. You need to wait for the right entry, especially when you see the market is breaking out of the trend line or breaking from a key level of support or resistance, and the market grab liquidity and then reject back again from that level. And here is the market created that structure that you can see, where the price has broken that high and then there is a complete rejection with a liquidity sweep in that area. So with that bearish engulfer, the market has done that momentum and waiting for the price to return again to this support level. And that's where you can see the market creating the structure, and until we see that it has completely broken out the trend line, we are not on the trade. So what do you think exactly? Thank you very much about the test that trend line. Strong rejection. Yes, this is what we are looking at, especially rejection from the trend line. If you look at here, the long-term picture that you can see, the market was maintaining this trend line where the price is heading back from that level. So that's where you see that many of the trade that we have opened since the beginning of this week and even the week before, we had an incredibly high success rate in both of our group. And you see that it's very difficult to maintain this kind of win rate over time, and that's where you'll see that more often people get, it's a very normal part of trading that people get jealous. So some of our you see this is a copy that made from our channel. This is not us. I have found on online almost nearly to 10 to 15 copies that made from us, because they are fully, what I would say that try to replicate what we have done because of the uniqueness that we have done in Forex Trading Wizard Academy. You guys have seen that all the tools and the strategy that we are using completely generated from our original education, and that's helping hundreds of traders every single day. But that's where the best outcome that we had in the academy, because we are able to help the traders. And I know that trading education is rare and it's very difficult to find in this industry. But if you are a trader who is really struggling, because in the beginning of my trading journey, I had multiple losses, and also I had lost in many areas that was difficult to understand, difficult to trade. So from that place, that what we have seen, that trading is not very easy to understand unless you have the right guidance to trade. So if you are a trader who are really struggling, then probably this is where you can look at that. It takes time and you need to give yourself some time to become a consistently profitable trader. Now, I remember when I began my trading journey, all right? So the first in it, I think it's in 2024, right? I paid only $15,000 to learn what is trading. This is the reality, $15,000. And then what I learned is how to trade a pin bar. So every education that I got, that I realized that actually it doesn't come with, you can't buy trading education. And that's why you see that every education that I have is almost free of charge. This 95% given off is nothing in comparison with what you have got here, including all the library of courses that I have created over time, because every education that you can see, all those trades that you have opened here is based on observation. Observation is key. And when you know that how to observe the market, you can understand how the market works. And that's why you see that many of the times, in majority of the time, when you open the trade, the market bounce off that level. Why? Because that's where the smart money is buying that market. So if you truly want to be a trader on currency or gold or any other instrument, the key here is to look at that when the smart money is coming in the market. And if you want to know when the smart money is coming in the market, when they're buying the market, then you need to wait always for the second break that we discussed. So what is second break? Let me tell you guys, this will change the way you look at the market. Until I understand that, it never worked. So look at this first breakdown in each of the breakup structure. This is the first breakdown, right? The market has gone up. We saw that another breakdown and the market shoot back to the upside. Can you see that? You can do that back testing over and over again. You wait for the order block creation. If you look at the order block, you can see this is an order block breakup structure. And then wait for the second break. Even if it is a smaller move, that's where you can see the bigger move happens. Breakup structure, order block creation, bounce, retest. The second break is where the entry, and you see that all the trade that I opened based on the same concept, because the market is, if you look at the market, is always, if you look at, is random and chaotic. You won't be able to find ever any structure that will give you almost exactly the same pattern. It always, there's some variation coming up. To understand that, you need to understand that when the order block is being created, so that you know that there is an order block creation, a retest of the order block, entry on the retest. So now what we are looking at here in this market, if you look at it, you can see this is where the market structure has building that momentum and waiting for the price to revert again back in the major direction of the trend. Thank you. Okay, so here is, if you look at it, you can see what kind of market structure is being created, right? This is a very important support level. And in that important support, the price has got the rejection. Now we could see the break below or return back to the upside here. The trend line is where we can see the price is showing up. Waiting on that market, the way the market is creating here, the possibility for a bounce from that level is higher. As back-to-back two dojis, the price tested the lower shadow of this move, but it didn't test the upper shadow of that move that you can see. Right, so here is the market structure showing up. Here is the market showing up and waiting for the price potentially to revert back again to the upside in the major direction of the tree. Here is the price is showing up, possibly to have a rejection, which where we are looking at in that market for a correction, and then to see the price to have a possible bounce from that level. This is what we are looking at. For you can see it's maintaining quite a few long wick candle. Now there are two possible scenario here, guys. You can see it's maintaining series of higher low, right? And also on a trend line, it's possible that it's breaking out here and going back up to this swing high. So in that case, we will be able to look for a short-term buying opportunity, and that's what we are looking at, that an entry directional bias. It could still break below. Now, if it is coming back below after this liquidity sweep, we could see the market to come back here to this support level. What I think here, that the market may not break the low without breaking the high. That means the bias, the way the market structure is creating here, the bias could be first back to the upside. Why? Because of the structure that you can see here in that area. You can see this is a triangular pattern that you can see in that area, and in that triangle that you can see, okay, so if you look at that triangular pattern, that triangular pattern is a bullish pattern. So the market eventually could break to the upside here in that triangular pattern to that level. Okay, so breaking below is a potentially an opportunity to go long here, because it's a triangular pattern that you can see in this area. And you can see the price is breaking that low, waiting for the market to retest and then to return again. And here, the way the market is creating the possibility for a bounce of the level. So we will be using pending order here for any rejection back to the upside, because if the market breaking out of the trend line, so if you look at here, you can see a pole, a triangular pattern, and that's where you're looking at that in that area. Okay, so we'll be using the pending. Guys, this is a free education. I am offering a free trade alert, but you are trading in your own trading account. There is nothing that I can gain from here. So make sure you do the risk management, because I want you to make money, not to lose money, right? So I'm placing a pending order, but I'm sharing the same trade with you, so that you can learn, right? If you are using the demo account, that I highly encourage you to open in a demo account. But if you are using the live account, not more than 1% risk per trade. Very important. So that being said, I'm placing a pending order here above this high. If the market reject back to the upside, we will be waiting for an entry. If the market break below, we are still waiting to see where it is coming, because there is a green area here. So we'll be using the buy stop and stop loss below this swing low here. TP target at this level at the moment, because the market in narrow range, we cannot take a very bigger profit target, as the market may not go much higher in that area. Neither we can buy from here, because we would like to see that the market being able to break that resistance line for us to get an entry in this market. So we're placing a buy limit at 3976.31. Stop loss placing at 3964.79. And TP target placing at 3993.00. If the market reject back from this support level that you can see, as there is a breakup structure, we may see that the market to potentially go back up for another new higher high, or we could see that potential continuation. If the market continues here back below, yeah, we are also looking for possible selling if the price action shows up. But at the moment, the possibility for another breakup structure is higher. Minutes price action that you can see from a bearish engulfer. It's a falling market, not buy limit, buy stop. So place the buy stop here on gold. Okay, we will be readjusting this entry. What we are looking at here, guys, this is a previous support that we have seen. The market has managed to break that previous support here, and with that previous support break, are you going to see a continuation back below, or it's forming an order block here? So if it forms an order block in that area, in this area, we will be looking for possible buy entry with a retest of this low here. This is the 4-hour support. So we will be if you look at the intraday 4-hour support, that you can see this is the current session's low. The market in a range, so we cannot expect a very big move, but whenever the market is creating a move, we can take that. So the 1-hour candle close coming in a few minutes, which is this 1-hour price action is still showing that downside depending on how the market structure is being created. Now it might even could be potentially bearish, so you will not be taking this trade, this pending order yet. I have closed the pending order and we'll be waiting for a bit more clearer picture. As 1-hour candle close coming up, the market has broken the support level. So because the market has broken the support, are you going to see a downside to weak fill of the previous hourly candle? So you will be waiting to see that here, how the market structure is being created. If you look at here, you can see a pullback. If this market going up again, retesting, this is a key support turn resistance, right? So if you look at this, this is where, this is the high, this is the low of this move, right? So it's a very important move here that you can see. This is a high and this is the low of this move. Now we would like to see how the market is reacting to that level before the 1-hour close. And if the market is reacting to that level that you can see in that area, the market is reacting to that level, retesting and then rejecting, we can look for selling opportunity here in that market. I hope that you guys understanding. It's very simple way to know that, but what we are looking at here, that the market to see that how the candle is closing. And you can see this is the 30 minutes candle closed. It can be both directional. It can be bullish, it can be bearish, depending on. Now if it is an order block, so you can see that if it is an order block, what you would see the market to retest that order block and then to return again back up. You see this is an order block, the market has moved back to the upside. Pretty long wick candle here that you can see on gold, which is pretty big move that you can see here. Okay, so you can see that rejection from that key level. Now 1 hour candle close coming. This is a candle close just now, and now are you going to see a break below here to fill that zone? The current level of resistance is here. Okay, we can expect a potential rejection back below here in this market. Here is the market. In fact, from that level, you can see with this liquidity sweep trying to break that low, and when the market in a slower move, that means not trending very aggressively, you see the market will create a lot of liquidity sweep for bigger move in one direction. This is the 10 EMA. Here as we can see the market tested that level and expecting the price to come back here to retest this. There is an imbalance here that we can see in this area, which is key imbalance. And also if we look at the 30 minutes chart, that you can see there is a liquidity sweep, a middleman formation. So the price action showing up to be potentially bearish here in that area. So I am potentially biased here, as we discussed in the beginning. There is a head and shoulder formation for a potential break below here in this market. So the current 1 hour level that you can see at 3968 area. So our entry criteria here now at the moment at 3968 level for this possible drop back down here to this key support level. The price potentially to drop down here. I'll take a 1 minute break and waiting for that entry opportunity here. All right, so you can see maintaining that breakup structure in that area, and which is creating series of lower high and lower low, is still maintaining that downtrend. We could see that further bearish move. If we look at the 4 hour, you can see the price from that level. So approaching this previous session's low. Now this previous session's low is important to look at how the market structure is showing up. Now, as the market is approaching the previous session's low, we can see the price action is becoming bearish and bearisher, and could eventually break that low here in that area. Good morning. So what is the shadow in trading? What is a shadow in trading? I haven't heard of it. Is there any shadow in trading? Okay, you can see the market is trying to push back from this support level, which has a higher volatility at the moment. So 30 minutes chart, after this bearish middleman, the market started to break below, and which is eventually could create a new lower low. If we look at the 1 hour, also you can see that a complete breakup structure. We are waiting for an entry in the major direction of the trend, right? So here currently we saw there was a breakdown, and still it all those lines here for new fresh market. Every time I look at the market from, if you look at the fresh perspective, right? So the beginner mindset is the key here to look at in a market. So if you look at the 4 hour here as well, you can see back to back 3 important doji formation here, which is the beginner mindset. If you look at the daily here, the same kind of price action. So the market has come back to this daily low that you can see in that area, right? So as the market has come back to this daily support level, we could see that potentially another retest of this daily high or break of this daily support. We wouldn't risk that the market to create a new lower low from the daily yet before we see that enough liquidity sweep from the top. This is the previous daily low, right? Guys, this is the key here. Previous daily low is here. Now today's low is here. It didn't create a new lower low. And we are not going to enter sell from here. Is why? Because it's still maintaining that higher low. And breaking a series of higher low means that it's falling into this fair value gap. And to break that series of higher low, it requires enough liquidity sweep. So the market is still could go back even up to here without breaking that low, because it's a long-term uptrend. So we are looking at here for an entry, for a sell from any of this resistance line that you can see of these 2 important resistance line. Not buying at the moment as because the market is on an important support level. So this is one important resistance, the other one is here. These 2 key level are key for us today to look for sell in this market. Now there's an order block potentially being created. If the market creates an order block, that's the sign that the price could bounce back up here to this resistance line. This is a very important level for us today to look for sell in this market. We have seen that complete breakdown here in that area, which is showing up the market to possibly to rebut again back below here. And as if you look at the price is grabbing liquidity, bouncing off that level, what we are looking at here, the market to possibly return back to this key resistance line where there is a high area of value. Patience and consistency, these are the 2 key here to look at in this market before we look at an entry. Okay, so if you look at here, you can see this is the 1 hour chart, 4 hour market structure, and the lower time frame from the 30 minutes price action that you can see the price is trying to break that high here. This is the 1 hour resistance line. With a narrow doji, waiting for this market to bounce up here. Now the current level is here 3968 or higher, an important area for possible selling opportunity here. We see there is a liquidity sweep here, the price trying to create a structure that preparing for another deepen here in that market. So the level we are looking at here is breaking this high 3970, 3968 above here, this level. These are the two important areas that we are looking at in this market to give us an entry. And you guys have seen our previous trade that we have opened was a very important entry criteria that we had and successfully closed from that zone. And we are looking at now in this area the market to is slowly building that momentum back to the upside, slowly building the trend back to the upside here. Okay, so it's, you can see breaking to the upside, which is what we're looking at the market to possibly to break above. Now this 1 hour price action that you can see, it's still 40 minutes whole the candle remains. So once the market is going up during this lifetime of this candle is where you can find another selling opportunity from that key level. This is what we're looking at, and we can sell that candle to this level here. So which we can almost nearly to 150 people, 100 people we can target if the market reach that 1 hour resistance line here in this area. Would like to see further upside here for any selling opportunity here in this market. Are you guys ready for an entry? So here is what I'm looking at. As the 1 hour market structure is bearish, we can see that bounce from that level, expecting it to cross back 396768 level. Are you guys ready for a potential entry? Waiting for a potential breakout. So you might be able to find a potential entry for this move. We're waiting for a further confirmation that the market to break below. What we expecting here now, guys, a liquidity sweep from this high going up, and then to have a long week rejection or any kind of bearish price action, and then we will be looking into sell entry here from this high. Okay, so it's breaking back below from that high, and okay, so here is the market structure trying to build that momentum for a possible break below. Here's the market structure showing up that the price to potentially, you can see it's breaking above again, and this is the 1 hour resistance line. Looking at this market to break that high and then to possibly to get back again to the major direction of the trend. So here is the price action showing up that it's potentially to look at the 30 minutes candle close coming. Breaking that high, and so with this 30 minutes candle close that you can see, it's a pretty long bearish rejection here in this lower time frame. We have 1 minute 40 seconds to go for this candle to close, and what I think here is the price, you can see it's crossing that high from the 1 hour perspective. it reached that key resistance line, and that is where we might be able to find a potential entry shortly, as the market structure showing up that the price may bounce off that level. And with a double top here, I'm going to open sell from this level, stop loss build above this high. So with nearly to 68 pips stop loss targeting to this support level here in this market. So market buy order, looking for this market to potentially turn back below here to the major direction of the trend. So sell by market. So placing a sell by market order on gold from that level, my stop loss at 7.1, so at 3971. Even I can keep 22 pip as an pad for us. So I'm short on gold from that level, expecting the market to possibly to have a rejection back below to the major direction of the trend. So as there is a 10 EMA, if you look at here, you can see lower time frame price action, quite a few long wick doji being created in that area here on gold. So you can see the 15 minutes price action, there's a long wick doji, the candle closed, and that's a pretty long wick doji here. With that long wick doji, looking at here on the lower time frame, forming a possible rejection from the high. This is where looking at this market to potentially break below and then to give us possible profit target hit in that area, which is potentially to drop. And we are on the trade looking for an entry to take the profit for the first trade of the day, possibly to drop back down here to that support level. Get ready with this trade here. I am running in and we are up on that, so would like to secure the profit, waiting for the break below. And I will be also explaining in depth of the strategy that I'm trading with this strategy. This is what I told you guys in the beginning of the session. We help traders by giving the free trade education that was never free ever, but at the same time the reason is only so that you can learn and grow as a trader with proper understanding of the market structure, so that you can learn and grow as a trader from this, benefit from this education. Now if you think that this is something help you, make sure you like this stream, subscribe to the channel, and also press the notification bell so that you are not missing any of the content that I'm posting every day. Now we are on this trade expecting the market to trend back down. Now the market, we are on the edge, right? So we are waiting for this market to break below here to the support level, and that is what I'm looking at here in that market, that the price to how, in what situation you can look at the market to give us a trade that in the direction of your entry. What are the factors that you look at? And you can see this is the candle close on the lower time frame, and it's potentially creating a doji, and 1 hour candle close if you look at nearly there, and it's a downtrending market. So looking at here this market structure to you can see this is 1 minute candlestick pattern again crossing that high, which is the market structure is still locally here upside, but we opened the multi-time frame reversal trade. So 1 hour candlestick pattern is bearish, 15 minutes potentially to be bearish, 1 minute we saw that a bullish move and waiting for that market to break below here to the direction of the trend. Now looking at the lower time frame and where the market structure is trying to break that high, we see that multiple rejection from that level. From here it's trying to break that pattern to the upside here, which is a long wick candle that you can see from the lower time frame, a doji. We use the multiple time frame analysis for this entry, and Here's the triple top that you can see the market has formed, and again from the 1 hour perspective the market structure is highly bearish, and looking at this market to potentially to trend down here to the major direction, where lower time frame price action showing up that the price action to break in that direction. So we see that there's some kind of rejection coming from the higher price, getting that reaction back below, and here's the level that you can expect the market to trend down to that support level. Waiting on that break below, and we are on the profit zone again and wanting to see the market to come back down here to this key support level. We see that the market is trending, and which is in our side that currently, and if the market breaks below, we could see the straight coming down here to this key support level. This is what we're waiting to see the market being able to trend back down here to the major direction of the trend. You guys with me? So you are successfully running the trade and expecting that to break below further, and then to come back here to that, potentially to break that low even further low here. As if you look at the 1 hour chart, it's a bear market, and this is already the market is showing up to be downside. Are you guys with me with this trade? Say yes in the live chat if you are running with me. And did you like the stream? Welcome. It's my position 4056. Can I cancel that order? So you bought. Okay, it's a downtrend. Welcome. Should we enter now? Yeah, we are on the sell. How many of you are running this trade? Say yes if you're running, and make sure you fully manage the risk. As you can see, the market is here. The market structure showing this is a break again. So it might try to grab more liquidity before it finally move in one direction. So this is the 15 minutes candlestick pattern that we can see is potentially creating a doji here, and 30 minutes price action showing that possibly bearish. It might try to break this previous 30 minutes high, which one probability, and that's why I placed the stop loss little higher here. If the market in case goes up to get another liquidity, see, if you look at, this is a very interesting market structure, the sideway movement. Now, it might need liquidity from the top in this kind of sideway market. But the overall trend here in this lower time frame is still showing that to be bearish. 30 minutes. If you look at, you can see it's here pretty long bear candle. Now if the market breaks below, we should be able to see a complete breakdown to this support level, and this is what expecting this market to do. 15 minutes price action. We are looking at this market to possibly come back for deeper pullback, and there's the bearish rejection here that you can see the market is here. If the market now breaking back below 15 minutes candle closed with a doji, which is to possibly to trend down here, 30 minutes, there's a pretty long week candle. It's a consolidation, guys. This is a very interesting, and in that consolidation we are up and down. Indecision, yeah, this is what happens. Sometimes the market is in indecision, and that's the when the market does that, when the market remain indecision, it is a sign of breakout or breakdown. So here, if we look at, it's creating a market structure that that might break in one direction and then could continue to trend the other direction. Very strong sideways market. So from the 1 hour, it might go back up to test that 1 hour candle, and could still be back below to this support. As if you look at, it's almost there to the upside. Now it tested this 1 hour resistance line. For our perspective, that if we look at, now looking at this is a 1 minute market structure. See, this is a break above. Now if this is a fake out, if we see the market has broken back below here, we might see coming down, and in that case we are running one trade. Even I could re-enter again for another entry, keeping the stop loss above this high for this possible breakdown below. First of all, I would like to see it's successfully been able to break that low, but at the moment not adding any position because it has broken above. So there is a liquidity retest, and then we're looking at in this market to, if we look at, it's just testing the 1 hour resistance line. It's almost complete bounce back above, and it's gonna be unusual if the market really goes up further from this 1 hour resistance line. It's okay, so it tested this 1 hour resistance. Are you going to see that the market to back again to fill that 1 hour long wick here? So we are up to, it is completely possible to break below here for another test of this 1 hour daily support. The market is on the daily resistance line. So from this 1 hour level that you can see, the price has gone to that level. So before the 1 hour candle close, what we are expecting the market to possibly to retest that support again. From the daily low, got the rejection, and we might see the market to possibly to return. Did a pretty strong overextended market on the lower time frame, and so it might goes back up, and it crossed that high. It's very unusually has broken above. So you are looking to see that the market potentially to retest back up here in that area, which is potentially to going back up to this 4 hour resistance line, which is also the daily resistance. So we looking to enter from the daily high here, and this is complete bounce from this support level. Potentially you could see now the market to go back to 397576 level. And that's where you can see the price is approaching that level, and what we can see the market from here, it's to break and then potentially to fill that long wick in that area, which is showing up the daily price action. The price is currently, if you look at here, you can see this is the daily resistance line where the price tested the daily open and close, and from that open and close the market has rejected back again. Which is now it's still maintaining that uptrend, and we could see the price to continue to rise back up. Okay, so for us to see that another entry, as the market, this is the 1 hour price action, has a very sharp breakout, we could see the price to potentially go ahead and retest the daily high, and from that daily high is where we are looking at the next entry. If you look at the daily, you can see this is the current daily resistance line and also approaching this daily high. So we're looking at the market to possibly to retest the daily high or the daily resistance. That means where the market open, and then to come back below again. The bias here to the upside now at the moment, the market sentiment changes. You see this is back-to-back 2 intraday doji. It might range in a very narrow range for some more time until the news come later. And once the news is coming, the market has got a direction. That's where we can see again another clear move back to the one direction. That's what the trading is to wait for the right opportunity and then to enter when it not going in your favor, just to exit as soon as and then wait for the next entry. That being said, traders, hope that you enjoyed this live session. Which is coming up another live session in few hours. We'll be coming on in 3 hours time, coming on live again for another live session. For the NY session, we will be trading live preliminary UOM sentiment. We're also will be discussing in depth on how to read the market structure, how to read the price action, how to look for the liquidity. That being said, thank you for joining here, and I'll see you again very soon trading live together. Until that, stay well, stay happy.